Hi friends, I'm Ekta from Midcaps.in and now I'm going to explain 3 very important points related to stock market in this video. Point number 1 is small cap stocks. Small caps consist of those companies which come after mid caps as far as market capitalization is concerned and which are in beta stage of development. Historically, it has been seen that small cap stocks provide good returns to investors as they are identified late by many. Hence, the scope for identification and being part of growth potential is always exciting before they get visibility in the market. However, as a word of caution, proper research is required as adequate data and information might not be available because of the size of these companies. Small cap companies can be easy acquisition targets for big companies if the potential is identified. Also, small companies usually find it tough to survive during tough times because of lack of financial strength, and some might also be mismanaged businesses which are run by greedy promoters. So before investing in small cap companies, it is always advisable to check the credibility of the management, track record of founders and execution capabilities. Number 2 is mid-cap stocks. Mid-caps mean those companies which are in between small caps and large caps as far as market capitalization is concerned. Mid-cap stocks generally represent a moderate level of risk. However, when compared to small stocks, they maintain their position more effectively during adverse market conditions. When it comes to investment, mid-cap stocks are not as safe as large cap stocks. However, they form an integral part of any individual's portfolio. Mid-cap companies are very profitable in the phase of business expansion, whereas they can adversely affect your investment during bad times too. A thorough investigation is required when investing in mid-cap stocks, like track record of management, valuation, return on equity, return on capital employed, debt-equity ratio, institutional holding, and interest coverage ratio are some of the key fundamental things to look out for. Number 3 is multi-baggers. Multi-bagger may be defined as a stock which multiplies its value in terms of its purchase price. That is, the net worth is increased by a number of times by its original value. 5 things you should consider in the process of identifying a multi-bagger. Number 1. Debt of the company. Check the debt of the company with respect to equity and whether the same is increasing or decreasing. Also, is the company able to leverage its debt and equity or not? Number 2. Look for trend in sales. Increase in sales or revenue is a good sign of the company's performance and also indicates the stronghold which the company has on the market. Number 3. Areas for growth. See what are the major contributors of company's earnings. Has the company diversified enough or is it relying on one single area for growth? Number 4. EPS and PE. EPS and price multipliers do provide a picture on how the company is being valued compared to its peers. Number 5. Management and capex plans. Have a close look at the changes which happen in the company related to management along with the capex plans, as it would provide an overall picture of what the company thinks in near term. So that's all about small caps, mid caps and multi-baggers. Friends, we are coming with similar videos on number of topics related to stock market. If you found this video informative, please like, share and press the bell icon so that you don't miss our upcoming videos. Thank you. At 10paisa.com, we give you recommendation of 2 quality small cap stocks every week with a target of 20%. And we don't depend on numbers only. We do an in-depth research of each company with our vast experience in Indian stock market. So subscribe now to get 2 selected small cap stocks with analysis reports each week and reach new financial heights with 10paisa.com. Subscribe now to 10paisa.com.